Hi there, Chad Hauer here. Today I wanted to answer a question I've been getting frequently, which is how do I negate capital gains taxes during the sale of my home? So I'm going to dive into that. All right, so here at the Hauer Real Estate Group, our goal is to be able to help net our sellers the most amount of money. One of the ways we do that is we want to take a look at their potential tax consequences of selling their property. So wanted to jump into that here. Let's take a real world example. Let's say, for example, you were going to sell your house for $600,000. The current value of it today is $600,000. Now, when you originally purchased that house, you paid $300,000. So I want to walk you through how capital gains comes into play, the tax, and how we can avoid that. Let's say that spread, that $300,000 spread between your $300,000 and $600,000 house, we can bring that down a little bit because that's what they base your tax on, how much profit there is between that spread. You're going to have closing costs on that sale of the $600,000 house, roughly, let's say $50,000. You're also going to be able to write off any capital improvements you've made to the property. Now be sure, I want to make it very clear, I'm not an accountant. I highly recommend you have a good professional relationship with an accountant. But let's just take this, if we have a $600,000 house, you reduce the closing costs, also take out the capital improvements you've made to it, that puts your new basis at $530,000. So that's what we're working off. The original purchase price of $300,000 to $530,000, that's a $230,000 spread. So that's what the IRS is going to look at as being able to tax that. So here's the good news that I want you to keep in mind. It's what we call the 2 of 5 year rule. If you are a single person and you have lived in the house for 2 out of the last 5 years, the IRS will allow for you to be exempt from up to $250,000 worth of capital gains. So in this case, with $230,000, you're going to be fully exempt. You're not going to owe a penny of capital gains. Now, if you're a married couple, they're going to allow double that, actually. So you're going to be able to be exempt from up to $500,000 worth of capital gains, so long as you've lived in the house for 2 of the last 5 years. So how do we apply that and make sure that you're thinking through this when you're looking to sell? Well, if you've lived in your house for, let's say, a year and 10 months, let's make a point not to officially close on that sale until you've crossed that 2-year and 1 day mark, so that you're not paying taxes on a property that you don't need to. You can get it under contract, have the purchase and sale all signed around, but don't allow that closing date to be before that 2-year mark. Now, on the flip side, if you've moved out of that house a couple years back and you are looking and you've been renting it, but you still own it, but you used to live in it, you want to make sure that you sell that house. If you're considering at all selling it, sell it within that period where you can still say that you lived there for 2 of the last 5 years. Otherwise, you're going to be paying much higher taxes on it when you turn around to sell it down the road. So I hope that's helpful. That's what we're here for. Give us a call if you are considering selling your home. We'd be more than happy to talk more strategy with you and see how we can best serve you. Thanks so much.